All right. Um, what I'm trying to do is show you how to look at a market, and I'm when you hear me talking, we're going to talk about a couple of markets. We're going to talk about the markets I was describing last night, and I'm going to try to give you some follow up. And the important thing is not just to listen to it. To somebody say the market's going to do this or that. You have to see what happened. To the extent that you're told the market's going to do this or that, if you don't see the follow up, there's nothing to learn. That you never really get a chance to see if the analysis was credible. And some analyses won't be significant enough for you. They won't meet your criteria, perhaps, to take a trade or make a trade decision. But one of the most difficult things to do in markets is have a sense of where they are and what they're likely to do. It may not be a good trade. It may not have the right risk reward. It may not have enough range built into it because of the dynamics of the market. But it's very hard to read certain markets, and for most people, they don't even try to. They don't have any precision to their thinking, and so much of the time they're in markets really feeling that they're over their head or there's nothing they can say. They don't. If ask them, well, what do you think it's going to do? They won't really have anything to say. And that state of mind in a market is dangerous to trading. Now, if you know how to read a market and you're reading it and you say, well, I don't like the odds on this. I think the market's going to do this or that, and I'll wait and see, but I don't like it because I don't have certain qualities in the market that I need. I don't have enough range. I don't have established support or that I'm near support. But my reason is that in this market, my thinking is it may do this, it may do that, you state what it is, but the limitations are such and such, and you go back and you see if any part of it or all of it's correct. And then you have a sense of reading the market and having feelings based on the market and your credibility because you're going to go back and check. And now you're reading the market. You can have those feelings, I don't like it, but you have a basis because your process is through the properties of the market and how the market's trading those properties. And on some level, you're probably a little bit more objective if more often than not the market does the things you're going to do. And don't worry if you didn't take the trade. This is my advice. Learn to read a market, and sometimes you have no real opinion at all. You just don't know what it's going to do, and then it's not tradable. There's not much I can say here. I don't have clarity, and my decision is not to trade. If I want to watch this market, I'll watch it, but I'm going to make a decision that I don't have to trade a market that doesn't give me any sense of advantage or even position. And that's okay. You're entitled to not know what's going on in the market. But if you trade markets with that feeling about the market, there's something dysfunctional and risky about your behavior. So you don't have to know everything, but you should know something and have a sense of what the odds are for you. And the vast majority of traders don't even think in that way because they don't really understand the dynamics of the market. There's nothing they can say. They have no basis. They have no model for what they're doing. And that makes all the difference. What do you say to people when they can't see anything on the market because there's nothing to see? They look, but they don't know the alphabet. They don't know the alphabet and they don't know the words that can be derived from the alphabet. They don't know enough to read the market. So let's look at this and do a check on what I said, not for me to slap myself on the shoulder, but to show you how you go about uh, improving your ability to trade. Now remember, I'm 71. I'm near the end of all this stuff for many reasons. But if you're young and you start putting some of these pieces together, you know the tools that work, and you develop some kind of strategy that you don't understand, you don't know how to construct it, but you haven't done it for 40 years. You can save a lot of time and then use it for the next 30 years of your life or 40 years if you do the right kind of work. You can work hard, but you got to work smart. That's what makes the difference. So let's look quickly at this. I don't want to linger on Bitcoin. There's much more to show um, on gold. And I hope I don't forget to tell you this, because I know things I should say, and what I wanted to tell you, it's the irony and the delusion that this is a better market to trade than gold, but not for the reasons you think. And I hope I don't forget to tell you why. But let's just look at the chart we focused on. And so there's a lot of things that were said here, and I added tools and all that stuff. But I sounded fairly dogmatic, that this was a lousy, this market had a lot of risk. And if it corrected, the first place it would correct to find buyers is here. So it actually did that. And that it could get down to this area. And then somewhere on the clutter of words and thoughts and ideas, I said I would look for something, and then maybe I would look to draw my range boxes to play around, or whatever terminology I use. So in this market, if you look a little bit more closely, the market has a very big buying tail. And to a lot of people, this indicates that it's a very bearish market with a big buying tail. Actually, let's put it the other way around. It was a very big red bar, and now it has the buying tail. But when it was doing this looked like the end of the world. Well, it was coming to support an area, and it probably did stop out some late buyers. And this is pretty volatile, for the change here. And yet, it's not. Oops, what's that? Oh, the dollar. I wanted to talk about the dollar. Let's turn this thing off here. So, getting spooked by my own software. But in any case, what I would do with this market without lingering on this chart, because we're already 7 minutes and I don't have enough time to say what I want to say, I would kind of look at it in some form or fashion as a range box and judge the market. And that's all I'm going to say here. I have nothing further to say, but I have orientation. I told you, bad move to be long here at a breakout buyer. That is in fact true. And that the market will likely give me clues to the market on the correction. And it may be this range box. I'm not sure this is the perfect one. I'd have to think about it, but I can live with this for now, and I'm flexible. And then I'd put a vertical on there to find out what the range is, and that'll give me an objective measure of the range from the top of the range box to the bottom, accounting for outliers above and below. There are outliers. It goes above it. Remember, I want to be a pig. No, I don't want to be a pig. I've been called a pig, but I want to be greedy. I don't want to be a pig. So I make this range box. The wider it is, the better. But if I have outliers in it, the safer it is. So because I'm looking for targets, and I want it to be wide enough that I can trade it, but also I don't want it to be so heroic in the framing of it that the only way I make money is if I target the very top bar or the very bottom bar. I want to be greedy, not a pig. Okay, so there's a method to this, and also it's my trigger. When I see a market go above this range box, I figure they're the breakout buyers getting ready to get slaughtered, and the same for the breakout sellers as it goes lower. So it's actually a trigger for me. It's the inverse of what I would say less sophisticated traders do. I won't buy at the breakout higher, and I won't sell at the breakout lower. That's where the buyers are here. I'm sorry, the sellers are up here and the buyers are here. I don't want to go long into markets that wash out these sellers, because the market's going to do wash and rinses. You're just on the wrong side of the market more often than you think when you're a breakout buyer here and a breakout seller here. Now, if you said you're a breakout seller here as it makes a new high, I would be careful of that because it is bullish price action. But there are breakout buyers and sellers, and you need to know which one is likely to do better. There are breakout buyers and sellers here and breakout buyers and sellers there, but we're out of time for this. We're 9 minutes. So I want to go real quickly to gold. And gold's really the important one. I shouldn't have spent so much time, but what's new? And what I did in this is I described my thinking that the market, I'm looking for the patterns for the market to go to a better area, a 382 and other things that, is hidden here on the chart somewhere. But my problem is the market, hold on, I have to clear my throat. The market's at buyers. Even though this is a little lower, it's a double bottom. It's not, the rubber band hasn't really snapped yet to let the market move lower. Or it's a centripetal force, whatever you want as your criteria, but this is a 1.272. I don't have it marked here. It's a minor, it's a lower double bottom. It's a breakout failure until proven otherwise of this line, which is a support line. And it's just not trading right to short this market. And then what I said, sit on your hands. But I couldn't be short in this market. And I said that the market might actually go higher and it's going into lower lows and lower highs. But I want to talk about that and give you a couple of details. And I have to go fast so I can get the main point on here because I want to expand the concept of it. It's easy to see, but it's not always easy for me to remember to tell you things that are important to me. Now I'm picking another chart because I have all kinds of range boxes here. Now the middle range box, I left it white. It should be yellow, but I really want you to see that the market's ranging here, it's ranging here, and all these boxes are the same height. So if the market goes lower, and it hasn't done it yet, I would expect it to trade into this area. And if it gets near the bottom of this range box, the market is going to find buyers, and then it will have done its expansion, and then I'm looking for buyers for the market to go higher. But it hasn't done that. So for the sake of convenience, what I'm going to do is just use this box. This market's a breakout failure of this box. There was a range in it. When the market goes lower, it'll double the range of the box. It did that. Then if it goes higher, and then even higher than that, it'll double the range of the box. It does it not just in one swoop, but the market is trading to these range boxes. Now, in the meantime, there are intermittent range boxes that help me manage the market. There's not just that. I have extensions, a 1.272 extension of this at resistance. It's a sell. And when it gets to the bottom of the box, before it gets to the bottom of the box, if the market's trading lower like this, and it comes to that support area and it's a 1.272, it's a buy. And when the market gets down to here, I should be looking for buyers, but it only retests to basically to the 50% or 3A2. It's a weak retracement. It could go a lot higher because there's no structure, but basically it traded to this gap where the market traded higher or traded lower, and it just went a little bit above that. But it's a 3A2, and it's a what it is, it's a ABCD pattern. I don't want to draw it in, but it's from here to here to here. It gets down close. I better draw it in for people who, and I want to make my main point. I absolutely don't want to do this video twice. So it basically gets to this area, and it doubles the range of the yellow box. This should be a yellow box, but it's not. But it's the same height as this, and it actually trades to where there will be buyers, and it trades to the 1.618. The reversal is not only this box, but it did a measured move. I don't want to. I put it here to remind you. You have to do your practice and know what a measured move looks like. That's a reversal pattern to go along. When the market goes higher, it goes up $18,000. When the market goes higher, it has sellers here. You could have, it's bullish. You may not want to take it because it's a little too bullish for you. But what it did is it went to a 1.618 extension, which is a reversal pattern, and the stop could have been above this pivot. It's a lower double top. This is a little bit lower than this, and maybe you did or you didn't have a stop here. But in any case, what the market did, actually, you need to know this. Actually, the market is my question was going to be, what kind of a market do you think this is? If I were mentoring somebody, I would ask them, what do you think about this market? Is it a trending market? Is it a ranging market? What is this market to you? So what is this market to you? And if they were mentoring long enough with me, Of course, I'd be delighted to trap them in this, but I'd be a little bit disappointed if they didn't get it. What it is a market, just listen carefully. When a market starts here and goes here and comes to here, this is a ranging market. It's a ranging market of these two small yellow bars. It's a ranging market. When a market trades away from the bottom and comes back and tests the bottom, that's not a trend. And when the market trades at the top, goes lower and comes back to test the top, even though it goes a little bit higher, that's not a trend. This is a ranging market because of the boxes, and it's a ranging market because it stops and comes back to where it started in both directions. In a bigger way, this market has a top here, and it goes down to here, and it comes back to this area. This is a ranging market. When it goes from here to here and comes back to here, that's the other half of the range. This is a broad ranging market with $18,000 ranges, even though we have to adjust our range boxes to manage price decisions. It's a ranging market. And so really, you could have drawn, instead of one yellow box, you could have drawn, let's pick one. Let's destroy my beautiful chart here just for you. The things I do for people who are willing to listen to me. Well, I thought I had a thick black line. I guess I don't. Well, I won't get fancy. In one sense, this is what the market is. It's a broad ranging market with trending swings in it. And these swings, you see, you think Bitcoin's so great, but not that you're going to trade all of this, but this is an organized market. Everybody wants to pick the stock or the commodity, whatever it is that breaks out. And that's where the opportunity is. Now, you may not be able to trade it, but in the same period of time, this market went down $18,000, it went up $18,000, it went down $18,000, and you multiply that by 3 since November of last year, trading one market if you had the staying power. You may even make more money if and also less, and you may lose some opportunity because the market gets away from you, but it also has $5,000 corrections. This was a $9,000 move lower. So, and we focused on these things. So the concept that you need to be in a breakout market like Bitcoin to really make the money. So how would I compensate for it if I don't trade for Bitcoin? Well, if I'm a good trader, I'm not making $18,000, $18,000, $18,000. I'm making $36,000, $36,000, $36,000 with less risk. I have more risk because I'm trading two contracts, but what you perceive is your opportunity in markets that are intrinsically very difficult, and in some ways Bitcoin is difficult, and simpler markets which still have their challenges, you think you've lost your opportunity, but you haven't learned to really handle a market that will give you lots of opportunity if you learn how to read a market and learn how to balance your trading and you know how to trade with risk reward. This market can easily trade up to this gap here. I talked about gaps, but I only had seconds left, and that market trading here, and was it a reversal? There's so many every one of these. This was a reversal. You could have gone long there. That's for thousands of dollars. When the market came down to here, there was a reversal on it, and it went up about $8,000, I think, and then it went down about 9. I might be a little bit off, but when it came to here, it retested the gap. We talked about this, a later entry with a gap. So there's plenty of opportunity, and this market could easily get to this area, which is it's already up $3,000. Now, the thing is, I didn't take the long, but I didn't lose money taking the short. And this is the part that I'm trying to show in this market. And I decided to stay away from the short. I avoided problems even if I didn't make money. I didn't lose money. And if you're the type of trader to see the support, you might take the buy. So I'll take the buy. and I'll trade it to a gap. I think it could give me $3,000 to $5,000. We're out of time.